Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 23rd, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. S&P 500 again made an all-time record high, and I'm reading the news and they're really terrible with COVID surging worldwide, and apparently that makes very little difference for the stocks. We're looking at broad rally, and we're seeing new highs in multiple sectors, and we'll look at which ones. I'll show you an example of a trade we recently did for 3M. So that's a nice gain there, 28% gain. And junk that still hasn't made a new high, so this is a kind of divergence with the stocks, and I worry about where this is leading. Treasury bonds continue to bounce. We're looking at possible interest rates coming down further, and we'll see what's going on with dollar and gold. Dollar is acting weaker than I expected. And looking at Bitcoin and other cryptos, and correlations are high between them. Let's see where this correction is leading. And the two other newsletters I have are paid newsletters, so you can see that I'm going to cover all of these stocks there, and you can see we're covering a lot of speculative stocks as well. Alright, so let's get right to it. So S&P 500, I'm going to try to be as brief as possible. S&P 500, so again at new all-time record highs, didn't really come down at all. I kept showing my indicator lines, so there's green, blue, red, and yellow lines. So they are available from MasterChartsTrading.com. They are basically showing where the bulls and the bears make a stand. So where the I call them support resistance lines, I guess, and the places where the lines are basically just good places to make a decision about the trading. So looking at this chart, we're looking at a historical chart here. So we're looking at February of 2020, about last year when the pandemic began, and we see a collapse here. So we did not sell it short. This downward facing arrow was just there because I was just showing that if the stock dropped below the yellow line, so my indicators show good support and resistance, and additionally my indicators show trend. So if the stock is above the blue line, we are in an uptrend, and this is what exactly happened. So the stock went up above the blue line on April 29th, 2020, and at that point, unless the stock closed below the yellow line, so let's say it went up above the blue line and then collapsed, unless that happened, we will consider that we're still in the bull market. So the new bull run began after this washout in last year, and new bull run, in my opinion, began on April 29th, 2020. And why do I say that? Is because the breakout occurred on that date. And you can see it clearly on this chart. It's above the blue line. So this blue support resistance line, it actually means something. And you can clearly see that it is very useful, because if we bought it back here, we did absolutely nothing. We simply sat in the position. We would have been in very good shape, because our stop is at the blue line, so we are trailing at the blue line, you see. And how much did we gain from that? So this would have been over 40% gain, because we simply did nothing. We were looking at the support resistance. That's all we're looking for. We're looking for a breakout above support resistance, and then we sit in the position. Now, Forex and continuous instruments like euro versus US dollar, or commodities or, for example, cryptocurrencies, they're traded a little bit different, and I'll show you what I mean, because here our stop is at the yellow line, but if we were buying, for example, a Bitcoin or a Forex instrument like Euro, our stop would have been at the red line, you see. So a little bit different, but we'll get to it in a few minutes, okay? So stand by. So here's Dow Jones, industrial average, similar picture. Some of the funds come down towards the blue lines, some at a little bit of different time period. For example, S&P 500 has a little bit of a different picture than the Dow Jones. Dow Jones looks a little bit different, but overall the technique is the same. We're looking for a breakout above the blue line or a pullback towards the blue line. So at this point we're buying there, you see. So this indicator is basically all I use. So I actually, they look very simple, but they're quite powerful. And if you talk to my subscribers, you will know that it's very simple, but this is the beauty of it, you see. It's easy to use, and it produces wonderful results. So my personal profit factor, so how much money I make to how much money I lose, is 3 currently. So I make $3 for each dollar I lose, which is very, very good. And my success rate is about 75% or so, 74-75%. So in 75% of the cases I can at least make money, and occasionally I can make a lot of money, just depending on the the option we buy, because we also trade options. We trade stocks, we also trade options. Options produce much bigger results, but then you need to know what you're doing, so stick around. QQQ, so NASDAQ, breakout occurred, even a little bit earlier than S&P. Here breakout occurred on April 14th versus April 29th, I think I said. You see, April 29th. So QQQ was another sign that we should not be thinking about selling short back there in March of 2020, and we're just, we hang out. We exited all of our positions back in February of 2020, and we were just, sitting and doing nothing. And then once the opportunities began to appear, in April of 2020, and we started buying them. And I'm talking about ETFs only. We're also trade, of course, individual shares as well. So even though right this instant you can see how far we have come and how far we are above the support resistance blue line, there are still opportunities within each of these funds that we look at and every day basically, and there are tons of opportunities out there. So people say that, well, everything is so overbought. No, there are plenty of opportunities. Again, we will look at those every day. So I'll show you what I mean here. We have a scanner. I get scanner results. So I get scanner results every day. So for example, this is the the stocks I get scanner results on. And so, for example, this is one of my favorite results, is all stocks with options. So we scan over close to 4,000 stocks, and on average I get about 130 per day. So we have a lot of results every day. So we have to really filter which stocks we trade, you see. So no, there's plenty of opportunities out there, even at this seemingly overbought levels, right? We're not going to be buying this particular ETF, QQQ. We'll be buying stocks within QQQ. You see what I'm trying to tell you? But back in April 2020, this was the actual security that broke out. We're not talking about the stocks within QQQ. We're thinking about QQQ itself. But right this instant, you see there was no opportunity. So this latest one, I'm gonna go zoom in a little bit. We're looking at NASDAQ QQQ here from February 16th of this year. Pulled back. Where did it pull back to? It pulled back to the weak support. You can see at the green line. And that was it. It didn't go any further, you see. So small caps again also are approaching records. Again, latest opportunity to buy was in September of last year. It's clearly marked in this chart. Before that, there were several opportunities also to buy in May of last year. You can find out more about this indicators. You can see there's a name on the chart here, Master Charts Trading. So you can have the same lines on your chart, and it'll be just so much simpler for you to trade. Here's real estate. So this now I'm looking at individual kind of sectors within the larger stock market. And here's, for example, real estate. I mean, you can kind of see that it's a very similar picture. And I'm going to show again, this is real estate, and it is it has a correlation coefficient it has a correlation coefficient applied to this chart, and it's a correlation to the S&P 500. So by and large, this is real estate. By and large, going back a few years, vast majority of the time, you can see that they correlate in the same direction. So they have positive correlation, and occasionally, really quite outlier territory, they do their own thing. So what I'm trying to tell you is that real estate, and for that matter, pretty much most of the stock funds, except for perhaps gold, we can kind of look at GDX. So GDX here, you can see gold, not exactly clear correlation. Sometimes it does one thing, sometimes it does the other thing. But for stock funds, for example, real estate, correlations are usually quite high. So what does that mean? That means that if one of the funds make a new record, and we're looking here at new 52-week highs, and we're not far from all-time highs for real estate, then usually the other sectors will follow. So here we go. We have real estate making 52-week highs, approaching the records. Records are not that far off. Transportation sector making new all-time record highs. Again, I mean, this is as good as it gets. IYZ, which is a telecommunication sector, also making a new record, 52-week high. So this is really very, straightforward. XLB, and this is materials, also at new records. Industrials, XLI, again, also at new records. So really a broad rally. Here's XLV, healthcare, again at new records. So really broad rally, and look how strong it is. Look how strong healthcare, for example, is. The breakout occurred very early here on the 8th of April of 2020 last year, and it just continued. They haven't even come down to the blue line. It just keeps going, you see. So overall, this is just showing how resilient the stock market is for whatever reason, and I'm sure the reasons can be found. We don't really care when we analyze technically. So this is 100% technical analysis. This ticker symbol can be replaced by something else, but the analysis will stay, you see. In fact, I'm going to show you next stock, 3M. So here 3M, I wanted to show you how I think and how I thought, for example, back in April of 2020, right there. So, and I'm looking at this chart. So this is 3M, and this is, let's pretend that we're here back in May of 2020. Again, we know nothing. We sit in a technical bubble, and I always tell my students that we do that. We completely ignore the universe. I tell my students not only that study stock market, but also that study meditation, because I teach meditation as well. And we completely ignore everything, okay? So we're sitting here in May of 2020, and we're looking at the stock, and what are we looking at? We're looking at a new low on 23rd of March. But then we're looking at a significant rally, and what was cool about this thing is that we touched this blue line right there on 28th of April, bounced off of it. So again, this blue line is an indicator, it's calculated, you see. The name of the indicator is MasterCharts Trading, so you can find it. And it bounced off, continued lower, but it wasn't really a strong bounce to the bottom. Again, right there, another touch of the blue line, and also very interesting right there, there's a gap on 18th of May. See how it gapped up above the red line? So this is another clue to tell you that maybe it's not a good idea to sell it short. Because up till now, you could have sold it short quite well, you see. There's the initial breakdown. I would consider initial breakdown right there on the 6th of May of 2019. So at this point we say, okay, this stock is no longer in a bull market. It is no longer in an uptrend. It is now in a downtrend. I want to find an opportunity to sell it short. And surely I don't want to own it. So if I, for example, bought it back here on the 26th of March, I would have by now exited, even though it may have been a small loss. But this one most likely would have been like a break even, because I would have taken some profit. Regardless, we're looking at a downtrend in security. We would have been out in a sense of where we would not be long, we would not be buying the stock, or we would have been out of our long positions. We're looking to sell it short, okay? Let's say, for some reason, okay, we're hell-bent on shorting. And right there is the opportunity. So what happened is, on the 25th of July 2019, the stock bounced towards the red line. Now, remember, I don't know anything about this, right? Did I just say that there was some kind of a management shakeup, or maybe perhaps some earnings report, or something of that nature? No, I did not say anything of that nature. All I said is that bounced towards the mathematically calculated level, which at that point was at 181.98. You can see it where it is, clearly red line. So at this point, I would have shorted it if I really wanted to. And I would have been very correct. Yeah, I would have made good money here. Most likely I've been partially out somewhere around 6th of September. And then again, I would have probably come in again and shorted it again right there on the 7th of November 2019. And I would have been still pretty correct, yeah, because I would have probably made money here on the 5th of December, easily. And again, I would have shorted it somewhere around here on 30th of December. And again, I would have been correct, of 2019, you see. Now at this point, on the 22nd of April 2020, I may or may not have shorted it. This was not a very convincing bearish candle. So let's pretend I didn't short it right there. And I would have been just doing nothing, no positions. You can see it right there, 28th of April, there was a touch of the support resistance line. Possibly on the 13th of May I would have shorted it, possibly, but I would have been wrong, most likely. Let's see if I was wrong. Yes, I was wrong right there. On the 3rd of June, I would have gone long. I would have closed my short position and I would have bought. You see, this is the inflection point. This inflection point happened on the 3rd of June. That means that at that point, 3M company on 3rd of June, I don't know what happened. Maybe, okay, we can look at earnings if there was earnings. So let's look at earnings. Earnings were a while back. Earnings were okay. They had good earnings, but there was very little reaction to earnings. So we would have been long. In fact, I think I was long here myself, because this looks like a white arrow, and I usually mark my own entries by a white arrow. So I must have been long myself here, 22nd of July 2020, and I was very correct. Most likely I've been out here and re-entered again if I was trading it, but I wasn't trading this particular stock on 2nd of October 2020. But you can see these up arrows. These are actual alerts to my subscribers, and I can show you my records. So at that point, 3 a.m. it was bullish. So up till 3rd of June 2020 it was bearish. But then on the 3rd of June 2020 something happened and it became bullish, and we started buying it. Okay, so earnings, let's see what earnings said. I don't know, they had earnings. It makes very little difference. That's what I'm trying to explain to you. So this last trade, I mean, if you did nothing or just sitting in the position, on 29th of October trade would have been 28% gain. Hopefully you got in with an option here. Best thing to do is buy an option like a year out, and this is easily 3 times. So let's say this was 28%, easily 3 times, so maybe even 100% move on the option. Most likely more than 100% move on the option. So this is because it's just the way it moved almost immediately. So congratulations to subscribers, and you can see how clear and understandable this technique is, right? Do you see the inflection point? You can't miss it, right? But you need a special tool, and this is the special tool. You see my indicators are the special tool. So if you have the same indicators on your chart and you can do that, you can also trade the same way. Looking at junk bonds. So junk bonds, not much again. So I wanted to see a new record or a new 52-week high here. It didn't happen. So this is again correlation coefficient with S&P 500. So S&P 500 and junk bonds, so high yield bonds, you can see how highly they correlate. They correlate very highly, okay, in comparison to treasuries, TLT, whereas the correlation is actually mostly negative. Do you see how it's quite negative right now? And so the junk bonds, since they correlate so well with S&P 500, and the junk bonds haven't yet made a new record, while the S&P 500 has been making records for a while now. So this is what concerns me. This is a divergence between the S&P 500 and junk bonds, and it does concern me. I'm really hoping that the junk bonds will go to new highs. Treasuries TLT currently in a bear market. Couple of some of the opportunities here to sell it short. In fact, some of my subscribers took it. Simple straight trade, just buy puts. I would have been buying puts here. TLT, so this is treasuries. So treasury is currently in a downtrend. We're waiting for a bounce. So we're waiting for a bounce towards the red line. If it's going to happen, that would be again an opportunity to sell it short. By extension, if we're selling short TLT, then we're thinking that TYX, the treasury bond yield, will go up. And that's what's been happening since the 6th of January here. You can see a breakout for the TYX. All right, let's look at dollar here. So I've been, it's again entirely possible that I've been just overthinking this, and dollar is still in a downtrend, and there is no turnaround for the dollar right now. That would be true if it makes a new low, and it's entirely possible it will. So I am you know, right now the situation is quite difficult, honestly, between the interplay between dollar and gold. So here's dollar, where I thought it's gonna continue higher and breakout. No, it didn't do that. It just went down. So I'm looking at gold. Gold seems to be in a bear market. You know, there are multiple signals. Here's the first signal on the 8th of March. Right there, that's the first signal for bearish for gold, and then there were multiple more signals here on the 17th of March and 18th of March here. Looks like we're going to be again approaching that area at 1822. So again, we will really closely watching this 1822 area and see what's the price action will be like. Right now, it seems still to be bearish. At least temporarily, gold still seems to be bearish. Let's see if 1822 level will prove me wrong. I don't know. We'll see. We need to see price action there. Right now, I'm still betting that the gold will continue lower in the short term. Intermediate term. Short term, it might continue slightly higher. But the way dollar has been acting, it's just I'm not 100% where this is going. It seems that dollar is under pressure, but gold is not really, you know, taking advantage of that much. So 1822 is the level to watch, and let's just see what happens there. Bitcoin, on the other hand, so Bitcoin, we called Bitcoin, that's a nice call of the century right there. 29th of April 2020 is a breakout. Before that, Bitcoin. So as I stated at the beginning of the presentation, so continuous securities like Bitcoin is traded between the blue and the red line. So in other words, if I buy Bitcoin here on 29th of April, I would put my stop at the red line. If this was a stock, like, I don't know, Apple, I would buy here on close above the blue line, but I would put my stop at the yellow line. This is my inherent bullish bias specifically for stocks, okay? Nothing else. When you're trading Bitcoin, there's no bias. We don't know what the heck that is. It's just technical analysis. So 2019, you can see downward facing arrows. We were selling it shorting gold here. Then something happened. Something happened here on 29th of April 2020. It broke out. Bitcoin broke out again. So we're buying and we're trailing at the blue line. We're not trailing at the green line. We're trailing at the blue line. See what happened if we do that. So you can see that we did not get stopped out. We only may have been stopped out here 22nd of January, you see. But this is an actual alert to my subscribers. 2 alerts, 22nd of January, 27th of January at 3,500, 3,200. Previous alert was at 7,000. So you can see we're approaching that same area now where before it found good support, excellent support. Will it find the same support now? Let's look at 4-hour chart. Here's a 4-hour chart of Bitcoin, and you can see this price action here. So this is what I'm trying to say about the my indicators. You can clearly visualize it. So for example, here's the breakdown on at 4 o'clock candle right there, 18th of April, and then you can just sell it short there. Put a stop above the blue line on close. Usually I do a close on close above the blue line, and sit in the position for a little while, and then when it goes in your favor right there on 21st of April, possibly, you know, take part of the position off, but then trail the rest. So at this point you should still be at least partially in the position if you were doing a short trade. So that's 11% gain right there. And this is, remember, this is a 4-hour chart. So going back to daily, and I generally prefer to trade on daily charts. just easier for humans. We're looking at this level 44241, so this is the level to watch for Bitcoin basically. If it holds there, maybe, good news and we'll buy more. But if it doesn't, we will be looking at a new level at 30,470. So 30470 is the next level to watch. Okay, that's it for this week's recap. Head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. So these lines on the chart, the green, blue, red, and yellow line, this is the indicators, trading indicators. So if you just sign up for that free 7-day trial, I'll open the door for you on TradingView.com, this interface. And this is a free interface, so you can sign up for a free TradingView account, sign up for a free 7-day trial for my indicators, and then try them out. I also have a newsletter, actually 2 newsletters. One is called Elite Newsletter, one is called Stock Speculator, and we just trade different kind of stocks. You can download the sample of a newsletter. I do a daily recap. And for example, in this case, it was an alert for China, and you can get all of my alerts in order. So, and then also I have another product called Stock Screener. So the Stock Screener, what I just showed you, we get results on all of these different stocks, stock funds, and you can pick and choose what is it you are looking for, which stocks within the universe you're interested to trade. So the prices are also, I think, better. So you'll find them better. I think people were complaining that my prices were too high, perhaps. But then again, you get very good quality service, and the product is truly unique. The trading indicators are unique in the sense of the ease of use, and you can just trade without any experience as long as you follow directions, and I can provide those. Right, that's it for this week's recap. If you have any questions, please let me know. Thank you for watching. Have another great trading week. Bye-bye.